The economic crisis is getting closer and closer. Countless analysts, businessmen, business professionals, and others have already said so. The global situation is getting more and more complicated, and people are unwittingly encouraging this situation with certain behaviors regarding their finances. Yes, it seems that hyperinflation is something that is no longer in our hands to avoid, but what we can do is to protect ourselves and save our wealth from the crisis. One that, although we do not know for sure when it will arrive, could be the cause of several problems that will be unleashed in a chain. But when the situation catches up with us, will we be prepared for it? Will we have the assets and resources to pay for ourselves and the rest of our family? And what measures will we take to ensure that the crisis doesn't hit our homes so hard? These questions are still on some people's minds. Precisely those who have taken an interest in the subject and do not deny the possible results that could be experienced worldwide. It is for them that people like Bill Ackman have gone out to give lectures in various parts of the United States, as these figures seek to get the rest of the population to prepare for what could be their worst crisis in more than 20 years. Whether or not he succeeded is anyone's guess. What we do know are the words the investor has dedicated to his compatriots. It all starts with Bill Ackman, when he gave a series of lectures to small groups in the financial and corporate sectors. For some months now, the investor has been warning about certain behaviors that the economy is showing, facts that are already revealing several alarming figures. As far as is known so far, this information has not been shared on a large scale. Nobody knows why this data is reaching a small percentage of the population and nothing else. But what is known is the economist's opinion and position. We should invest, but there are certain types of stocks in the market which are not suggested to be touched at the moment. The reason? The stock market crash on a large scale. Thanks to the lectures given by the businessman, it is known that one of the measures that the Fed has been forced to implement is more aggressiveness against inflation. This is still on the rise, which is why the investor is calling for the problem to be addressed, as it shows an alarming picture. In Ackman's words, quote, "The Fed has lost credibility. It has failed to stop inflation because it is out of control." In this context, the situation reveals a whole series of factors that will be discussed below. The first of these is the fact that consumer confidence has declined. It is worth noting that 70% of the US economy is consumer-driven, so at this point in time, if people are not confident, necessary assets such as mortgages will collapse and reach historic numbers, figures that were not recorded 22 years ago, and that saw the light of an interest rate that has moved to 6.2%. Markets collapse because investors do not trust the Federal Reserve and consumer prices. This is because rates have risen 8.3% this year in April alone. The sectors that have been hit the hardest are food and fuel. This just goes to show that inflation is out of control. Ackman has also reported at conferences on job vacancies. These have become more expensive, so that the unemployment rate is rising to 3.6%. Of course, the biggest losers in this area are young people just out of university. On the other hand, the imbalance between supply and demand is driving up prices in sectors such as energy, agriculture, and food. And the worst thing about all this? There seems to be no sign of an end in sight. On the contrary, material reduction is far from happening. Something that made a lot of noise among investors and economists is that Bill Ackman commented the following, quote, "The Fed's current policy and guidance are not prepared for sustained double-digit inflation, which can only be avoided by a market collapse or a massive rate hike. The latter is the solution that Bill himself has called for the Fed to implement, so that the interest rate hike will not be gradual and with few assets, but more aggressive." The investor has even spoken of monetary tightening tightening measures with all the money they have printed. Markets will soar once investors can be sure that the days of runaway inflation are over. That thought is very encouraging, but looking at the current situation, the questions have not been long in coming. How is stability supposed to be achieved if Ackman's proposed measures are so aggressive? Well, it seems that the answer lies precisely in the fact that these measures are followed without question. From what the businessman has already promoted, forceful action by the Federal Reserve System and its subsequent follow-through could relieve some of the pressure on the market. This would gradually provide the ecosystem needed to get out of trouble. Failure to do so would plunge the United States, and consequently other nations close to it, into a historic recession. Given the situation, Bill Ackman has thrown out two pieces of advice, which can be used to make investments, regardless of whether the economy is experiencing aggressive inflation. The first is, have a predictable business that can raise prices. This is in order to combat inflation. An example of such a business that can be set up would be fast food chains. McDonald's, Carl's Jr., and other establishments continue to receive an incoming balance for a reason. Food is a basic need that will always seek to be met. Secondly, we have the following advice. Invest in businesses that are not affected by rising rates. What do you mean by that? That companies that have high debt and variable rates are not advisable to invest in at this time. Quote, the current market downward spiral will only end when the Fed draws a line in the sand on inflation and says it will do whatever it takes to get out of it, Ackman insisted, adding that the central bank will have to keep going until the inflation genie is back in the bottle. For his part, Jerome Powell, chairman of the Federal Reserve, affirmed and reiterated his determination to further curb inflation, saying that the US central bank's commitment moves the world away from holding and trading dollars. In Powell's words, quote, the Fed's strong commitment to our price stability mandate contributes to widespread confidence in the dollar as a store of value. On Wednesday, the Fed raised interest rates by 75 basis points. This is the largest increase since 1994, and signaled that they will come more aggressively as they battle the highest inflation in 4 decades. Despite Bill Ackman's statements that the Fed has already lost credibility due to its misreading and late inflation trigger, several current and former Fed officials have spoken out. With measured comments and no disguised surprise, these men and women are proposing a modest rate hike as a way to provoke a pause in the downturn. Yes, the Fed has already begun to take action. However, the coin is in the air, and as the days go by, it will be seen whether Ackman's words are heeded, or whether the strongest economic recession the US has suffered in years will be inevitable. For the moment, these are some of the main fears in the market. That the Fed will have to provoke a recession to contain prices is already a cause for concern. Add to that the fact that some analysts believe the move is likely to cause a severe and sharp slowdown in growth in the coming months. We are at a crossroads with two equally difficult and dangerous paths. Which path will the Fed choose? For now, we can only hope that the governing body is doing its job well. As Bill Ackman said, we close today's video with that final warning from stock market expert and investor Bill Ackman. As you can see, his comments and suggestions are similar to the action plans that other businessmen and economists have taken in recent times. Because of this, we can assume that everyone is in asset protection mode, which gives us an idea of what we can do to ride out the crisis. Now that you know, what will be your plan of action for the coming months? Are you willing to follow Ackman's advice, or would you rather listen to the suggestions of other experts? We're just telling you that, whatever you want to do, you may need to speed up your plans. Remember that the crisis has no start date, so it could emerge in the next few months, or as early as 2023. Leave your comments on the topic in the box below, and if you would like us to talk about other finance-related topics, don't forget to leave your suggestions. See you next time.